Hi guys, Chris Ingram here with Prosperitas Financial, and today I'm going to talk about donor-advised funds. One of the things that I love about the community that we live and work in is that it's a very philanthropic community. They love to give back, and donor-advised funds is a great way to support the charities or the causes that you love, while at the same time doing some good things for you tax-wise. So let me explain how they work. Donor-advised funds, best way to think about it is it's an account that you're putting money into, and the minute you put the money into it, you're getting a tax deduction for the contribution. But that money is still very much in your control. Depending on the company you choose to work with, you're going to get to manage those assets, invest them how you see fit, and then you can slowly pay out that money to whatever charities you want, IRS qualified 501c3 charities that you support over time. And so a couple different ways to use it. So I mentioned the tax deduction. So let's say that you put $50,000 into the donor advised fund in 1 year. So you're going to get a deduction for that full $50,000. But let's say you, on average, you contribute $10,000 a year to your favorite charity or church or whatever it may be. You could put $50,000 in all in 1 year, get the big tax deduction, and then over the next 5 years, pay out $10,000 to your favorite charity. Where this can come into play is that let's say you have one big year where you have something that went on that you know you're going to pay a lot of taxes that year, high income, whatever it may be. So you decide to front load those charitable contributions all into 1 year so that you have a big deduction to help write off against that big tax liability that you have. The next thing to think about is you're going to continue to manage that asset, and it's going to grow tax-free because it's for charity. So while you put the money in there, the great thing about it is you may have a plan to pay $10,000 out over the next 5 years, but if the assets are managed properly, this account might grow to be $60,000 over that time, and you may have another $10,000 that you're going to ultimately give to charity tax-free. So it's a great way for you to do something good for yourself tax-wise, but also grow it, manage it, and potentially turn it into more money that you're able to give to that cause that you support over time. Last thing to talk about is appreciated assets, and this can be used quite a bit for people. So let's assume that I buy some stock for $10,000 and it grows to be $100,000. Okay? Now, if I sell that stock, there's a $90,000 capital gain there that I'm going to owe taxes on, right? So let's say I don't want to do that and I need a big tax deduction. I can take this asset, put it into my donor advised fund. Not only do I not have to pay the taxes on the capital gain, but I get to take a $100,000 deduction to help offset whatever tax liability I have that year. And I just gave $100,000 to my favorite charities over the course of however many years. Now, there's some rules with this. There's a 30% cap on your adjusted gross income of how much you can use each year, and then you have to carry it forward if it's more than that. But I won't get into all those crazy details. But fact of the matter is it's a great way to take appreciated assets, whether that be real estate, stocks, private equity, whatever it may be, and avoid that capital gains tax and put it into an account where you're going to get a big tax deduction and do something great for your favorite charities. So donor advised funds are an excellent way to do some great things for you from a tax perspective, and also to do some really great things for the causes that you support. And if you want more information about those, just give us a call or check us out at www.prosperitasfin.com.